So I'm not stamping this with the compound growth
Approval.
Okay,
sounds good.
But I'm curious.
You're just pointing something out.
I'm pointing out what the guy at Blind Squirrel Macro has pointed out.
Okay.
And he suggests that this IPO won't happen and that instead it's a head fake. And in reality, Tesla will absorb SpaceX because there's just no way that they can find this demand out there.
That's a bombshell thought.
Welcome to the Compound Growth Podcast with Colin and Wheeler, where we talk all things growth. From financial growth to career growth, personal development to societal progress, we explore how each layer builds on the next, compounding over time to shape who we become. Each week, we break down complex ideas and emerging trends into clear, actionable insights. Because growth isn't just about numbers. It's about understanding the world and our place in it.
I want to talk Ferrari.
I thought we might start with this.
Okay, let's kick off with it. This will be our opening. Have you looked at the Ferrari Luce that's come out?
Okay, so first blush, I don't see any issues here.
Really?
I do not think that's an ugly car. I had a very strong reaction to the Cybertruck. I did not have it with this.
It's not about the looks for me.
Okay.
They're coming out with a car that's already dated.
Okay, yes. But I'm saying first blush and like how it looks, it doesn't bother me.
Here's the problem for me is I don't necessarily think, and this is actually a perfect example. Kaylee and I were having a hot debate on Star Wars last night.
Yeah.
Okay, so the movie The Force Awakens. I was like, this is a good movie. This is a good Star Wars.
Wait, that's the first one in the latest trilogy.
Correct.
Okay.
And she was just like, you can't judge The Force Awakens as a standalone movie because the two subsequent movies after were like some of the biggest atrocities in filmmaking history. It completely destroyed the series.
No, what? Of course you can.
The two most recent she was saying are terrible. And I'm like, I totally disagree. And I'm like, I totally disagree with you, Kaylee. I'm like, this movie as an isolated movie was a good movie.
Okay. Yeah, I think you can judge it as an isolated movie.
Right.
Right.
So the thing with the Ferrari Luce is it might be a good looking car, but it's not a Ferrari. It doesn't, you don't look at it and be like, yep, that's a Ferrari. In the same way that you look at a Lamborghini or something driving down the road and you're like, yes, like this is a Lamborghini. The problem is that they're coming out with this car. Did you see the opening price, asking price?
I saw it was very high.
$640,000 is what they're asking for a car with worse performance than the Tesla Model S.
Yes. Okay. Wait, pause. If I'm looking at this car in red and it has a little Ferrari emblem on the front, I see Ferrari.
If it didn't have the emblem, though.
Well, I mean, even if it's red, I don't know. I think the problem is that everybody's putting around this baby blue. That's the first one you see is the baby blue one.
It is the baby blue one, or you see the yellow one, or the green one.
But the red is the Ferrari. Why aren't they? I feel like they're making it worse by not showing the red one.
I was listening to a review of this. And what I thought was hilarious was if you think about a product release, if you feel really, really great about the product, you're going to invite all the reviewers and all the journalists, like Porsche as an example, when they came out with their most recent supercar, the Carrera GT, or 2 times ago. They were basically like, anybody that wants to come down and drive it, you just drive it. We know it's a great car. Good luck.
Yeah.
Ferrari sent out a survey to all of the people that came to test the car and asked them how they felt about EVs, how they felt about like polarizing design. And it was a huge questionnaire.
Before they came
came to see the car.
Yeah.
And if you answered negatively to any of those questions, they didn't let you come see the car because they were worried about bad press.
Yeah.
If you were so confident in a product, you wouldn't do that.
Yeah. So,
you know,
I think this is something that happens in Hollywood all the time, right? They will either screen movies ahead of time to critics or they won't. And You're right. Usually to that point, if they're worried about the critical reception, they will not screen it for critics before it comes out. And big blockbusters will often be like this. Like they don't even need the critics to like it because they know the audience will show up.
Right.
Now we're in a place where on Rotten Tomatoes, you can totally manipulate the scores.
Oh, totally.
You know, so like it doesn't even matter. It's a whole new ballgame. But for this, doesn't matter what the reviews say. Because like Ferrari, you know better than I do. Ferrari manufactures on advanced demand, right? Like they don't have cars sitting around. They used to, and then they created the illusion that they didn't have enough, and now they never have enough.
Well, Ferrari Enzo's famous quote was, "How do you know how many cars to make?" And he was just like, "Well, I figure out how many people want them, and I make one less."
Right.
You know?
So, like, I mean, doesn't that predispose that there's some actual demand here?
Maybe, but I guess at the same time, $640,000 for an electric car is tough. I don't care if it has Ferrari as the name or not. The fact of the matter is the 340-mile range and 1,000 horsepower means basically nothing.
That's actually better than what I thought it was.
It's but 340 miles of range. The Rivian quad motor has like 410 miles of range and has well over that horsepower, and it's an SUV for a fifth of the cost.
Right.
So it's like, what are you getting? And I know Johnny Ive, designed it, but it's one of those things where I feel like it does look more like an Apple product than a Ferrari product.
I see the point. I think I can still see Ferrari with this car, especially for some of the earlier specs of it, but that's not what they delivered.
Right.
Does it matter though? Like, I feel like if you're talking about a Ferrari, did you ever care what the gas mileage was on a Ferrari? Like, why are we talking about range on a Ferrari?
Here's the thing that I carry about as an enthusiast, like a genuine enthusiast of the brand. Sound.
Sure.
It has to have a V8 or a V12 in it, or even the new 6s that they have sound awesome.
Okay, but it's an EV.
Well, right. Okay. But you have companies like Lamborghini and Porsche that were coming out, and then they've scaled back their EV production.
Yeah.
Because they're like, oh, well, all of our electric cars have been tough. But there's a ton of pressure put on all of these companies from regulatory agencies and things like that. So they have to do something about it. But the thing that is bothersome to me is it's such a big departure from A, the design language, B, I think the ethos of the company in general. The company was a racing company.
Yeah.
This is not a racing car. This is a consumer product that they're just trying to release to gain more, I'll say, purchasers and customers, and it's basically there to satisfy shareholder demand. I think they're losing their identity as a public company, personally.
That's interesting. I think that this car is the perfect representation of the time that we're in right now, where you have these crazy inflated values on everything.
Totally.
As long as it has some sort of, I don't want to call it prestige, but some clout, something's pizzazz, like something special about it.
Yeah.
That like now you're willing to pay. And I feel like Ferrari, like 6 years ago, I never would have looked at race as a ticker. Like that's not something I ever would have thought about.
Yeah.
I feel like something flipped on the other side of COVID, and you started to see the watch, the watch
craze blow up,
the shoe communities, like it's, and this is just another version of it. Maybe it's kind of like calling the top, so to speak, version of it. But like this, look, we're going to get into this. But in the time of a SpaceX IPO at $2 trillion, this car does not surprise me.
It doesn't surprise me. I guess to me, it's just sad that these companies that I personally grew up with such high regard, now they're more concerned with selling apparel and electric cars than they are actually going racing.
You know what's happening? You're becoming an old man right in front of our eyes.
Yeah.
This is what
a dusty, grumpy old man.
This is what happens. First, you shave your head.
Yeah,
and then you start complaining about how little Spotify pays their artists, and it's all downhill, man.
I know, and I'm even into World War II history now too.
Yeah,
just falling down this hill. But
you're one back in my day away from just getting a walker. Old man yells at cloud.
I know, exactly.
Your cloud is shaped like a Ferrari.
Soon I'm not going to know how to work my iPhone.
All right. Here we are again, Colin.
Yes, market recap.
Another market recap for May 2026.
Is
that it? Do you ever think, seriously?
2026?
2026?
Yeah, it's nuts.
How did I ever get here?
I personally think everyone born before like 2005 or born after 2005 is like 8 years old.
Yeah.
And I know that's not the case.
No,
but I'm just stuck in that mental time frame.
It's worse for me. It's even worse for me. But it is like, I do feel sometimes like I have to remember that the date is not like a Back to the Future date. All right. So we get a ton of slides to get through today because I got really excited about a couple of concepts. Let's just start with the basics.
Yes.
Current market year-to-date index return. So we are always tracking the large U.S. indices, the NASDAQ, the Dow, the S&P, et cetera. We're looking at emerging. We're looking at developed international, and we're looking at the ag, which is, as always, bringing up the rear. So looking at this chart right now, emerging markets up almost 25%, the NASDAQ up 15%. What surprises you the most year to date about those numbers, just in general?
The ag.
Yeah, the ag.
Yeah, the ag just literally flat.
This is total return.
I know, which blows my mind. So I was just looking before this at some of the big names in core plus bond mutual funds.
Yeah.
And they're basically all flat to up 0.5%. And the yield on them.
All the funds.
All the mutual funds themselves. And a lot of the indexes that, most people would know, all the big names out there, are all pretty much flat to up 1%. And I just go back to 8 months ago when everybody was saying extend duration.
Mm-hmm.
You remember that?
Interest rates coming down.
Interest rates are going to come down, extend duration.
Yeah.
We are at a point in time, and we'll discuss interest rates more, but interest rates have gone up dramatically over the last few weeks.
Yeah, the 10 years going.
Yeah, it's high. It almost hit 4.7.
Yeah. Yeah, because as we've talked about in the past, the Fed can only influence rates so much. And we've been in kind of a holding pattern for the Fed. So they're not actively trying to push interest rates one way or the other right now. So letting them act on their own is basically just betting on the future of the country.
Right. And inflation's been sticky.
Yeah. So that's interesting. And then the month itself is basically the same thing, right? It's the emerging markets outperforming. NASDAQ doing very well on the US side. The ag just flat.
Yeah.
Like nothing happening there.
Yep.
Not pictured here. And maybe we'll grab the chart for it. But Micron up 80%.
I saw that
in 1 month.
Yeah.
And probably, the day's not done. We still have one more trading day in the month of May.
Yeah.
But pop quiz, how many times has Micron's stock fallen 50% or more?
Like in what time period?
Just ever. Just going from a high of some kind. 7 times. 7 times.
So it's a rather volatile one.
Yeah. Micron does this. It's fallen like 95% at some point.
What is Micron?
So Micron engages in the provision of innovative memory and storage solutions.
Okay.
So basically just memory and storage as part of the AI build out.
Yeah.
Right?
Okay.
God, we always sound so stupid when we talk about the specifics of what the company does.
We'll keep it macro.
But here's the way to think about Micron. It's a cyclical business, right? Yeah. When there's a strong demand for these components, they produce, demand dries up, and then their stock falls. And it happens over and over and over. It's not the first time, like Micron's been around since the 80s. Right. So it's not the first time that we've seen this type of explosion. We saw, the rise of...
in the 90s.
Yeah. Well, computers in general, right? So you had computers in the business, and then you had computers on the home front. And then you had laptops, and then you had the internet build out. You had like everything, all of these little moments in time drove up Micron's stock. Yeah. The problem is you never know when it peaks
and what's on the other side
and why it peaks. But I know what's on the other side because it's a 50% decline. Like every single time it's a 50% decline. It's not a recommendation. Yes. However, every time so far it's been a 50% decline.
Yes.
So, what else is going on underneath the hood? We're also looking at oil, right? Yeah. And the price of gasoline. Everybody's been aware of what's going on with oil. We have the war in Iran.
Closing the Strait of Hormuz.
Yeah. So that has created a little bit of a shock in the supply and demand stream.
Yep.
Right?
So barrels up over $100.
Yeah. Yep. Now, what's interesting is when this first started happening, you heard a lot of people talking about oil going to 200. Right. Yeah. Like it's just, how could it not? Right.
Yeah.
And depending on which headlines you read, it seems like everybody's finding their way around this Strait of Hormuz being closed. Right. People are still getting their supply.
Well, I think what's funny about this is the longer the strait remains closed, the less relevant it becomes because people are going to find other routes, in my opinion. And we also have the melting of the polar ice caps, which is going to open up more ports and shipping up there. But
that's a whole other
thing. But yes, it has come down a lot from its peak. We're at roughly $90 right now.
Yeah.
But it did peak at 110. So it's down, we'll call that as near as makes no difference, 20% from where it peaked.
Yeah, but it's still up. If you look at the next chart, you can see that in June to February, it was 57 to 75. So we spiked, right?
Yeah.
And even though it's come down, we're still looking at a 40% change year to date in the price of oil.
Yeah.
So we're not seeing maybe the price of the pumps has come down a little bit, but it's still high.
It is.
And it's higher than it has been historically.
And it's going to remain sticky. It's not just because the price of the barrels goes down, you immediately see that at the pumps. It's going to remain higher at the pumps for longer.
Yeah, but it creates relief. So what's interesting is oil. So the war starts, oil skyrockets.
Yep.
Stock market digests, right? Mm-hmm. It goes through this period of time and says, okay, this isn't good. What's it going to be? And then it digests and move on.
Yeah.
And the market always moves on faster than we do. Like investors are always, the market is a collection of investors.
Yeah.
And very frequently, the crowdsourced information has more information than you as the individual investor, or we as the individual investors do.
Yeah.
Right. So the market digested and moved on very quickly and determined that this shock was just a shock and not an ongoing issue.
Yeah.
So I don't know what it knew about how China is still getting their oil from Iran, but
I don't know. We'll gloss over all of the political stuff, but yeah, I mean, it is crazy. I mean, it would be great to see the pumps go down again, but I filled up this morning for $4.35. I know you have an electric car.
It's funny though, even at, what was it for?
$4.30.
$4.30. Yeah. I mean, as a percentage of your actual monthly expenditure, like the impact of gas has really not increased the same as the impact of rent, for example.
No, if I think about filling up my car this morning, it was around $80 and I fill up, we'll say 2 to 2.5 times a month. I can usually go almost 2 weeks on a tank of gas. So if I'm spending call it as near as makes no difference, $200 a month on gas.
Yeah.
So that would mean my monthly expense on gas since this has started has gone up roughly, I mean, I don't know, maybe we'll say $35.
Yeah. So, I mean, obviously that sucks. You don't want to spend $35 extra on gas.
No one wants to spend extra on gas, but when you look at the other things that have inflated over the last few years, it doesn't really hold a candle.
Yeah.
And if you even go back to oil prices, everybody always talks about prices of oil, but if you go back over the last 50 years, I mean, it's amazing how little it's actually changed that much when you compare it against everything else.
Yeah. I mean, especially when you inflation adjust it.
That's what I mean. Yeah. When you inflation adjust it.
When I was at the debate last night, I was at the a primary Democratic candidate debate. And one guy brought up the fact that the price of oil used to be 99, or gas was 99 cents a gallon.
Yeah, not really though.
I mean, it was.
It was.
I paid that when I was in high school.
Yeah,
but it doesn't.
In the same way, movie prices were $7.
Yeah.
But things go up in value. That's what inflation is.
Well, they also go. It's not necessarily that they always go up in value. They go up.
Go up in price.
Right. Yeah. Exactly. Right. But either way, it's funny how you can anchor to a price and say that's what it should always be.
Yes, never be more than this. And, Costco hot dogs.
Yeah. Oh my God. Yeah. Those are not allowed to go up in price. You did a little bit of work looking at underneath the hood in the market.
Yeah, I did. I was looking in particular. I know we talked about what's done really well at some sectors that haven't done really well, and it was a refreshing look for me to look at the way the utility sector reacts to interest rate environments. So one thing I did is I charted just kind of the differences of how the markets moved between the 10-year, and then also I pulled up the State Street Utilities sector ETF XLU. And something that stuck out to me is that a lot of sectors, AI in particular, did really, really well in the month of May. But what did not do well was utilities. And the reason why utilities did so poorly was actually because of the spike in interest rates. And I was thinking to myself, at the beginning of the year, a lot of the talk was on the utility companies doing really well because of a lot of the AI build out, and they're going to benefit from all of this and the energy consumption and blah, blah, blah. But something that I failed to remember was how much CapEx is required for a utility company to actually expand. And given that interest rates are so high right now, their borrowing costs have gone up dramatically. So there's a ton of pressure on them to perform with all of this build out with AI, but the rate in which they're borrowing money is becoming much more expensive. Additionally, all of these companies, utility companies that are paying pretty high dividends right now, are paying dividends that are oftentimes less than what you're receiving in, I'll just say, the risk-free rate, which is, just treasuries in general. So there's been a money shift as well from utility companies that are paying a decent dividend to risk-free bonds. And that's pushed the utility sector down as a whole.
This is a really interesting chart.
Yeah.
Like just looking at the inverse nature.
It's totally inverted.
That is crazy.
Yeah. Talk about beta.
Yeah. Yeah. Wow. That's very cool. So what do you make of that?
So I personally think that there's probably going to be continued pressure on the utility sector as a whole, because a lot of people are saying that there's probably going to be an interest rate hike this year. The odds currently are 45 to 70% for one hike before the end of the year. Now, whether or not interest rates stay here is another thing, but interest rates were this high back in January of 25, I think it was. So a year and a half ago. And I think as long as interest rates remain high, we're probably going to see a lot of pressure on utility companies moving forward. But to the researcher's point, why would you necessarily risk the money in a dividend play when you can just get the risk-free rate which is currently higher than what a lot of these utility companies are paying in dividends?
Yeah.
Unless you're factoring in price appreciation on the underlying stock, which I'm not sure how much we'll see.
So it's interesting that you're focusing so much on the interest rates, because obviously Kevin Warsh has been appointed and approved as the chair of the Federal Reserve, and he starts next month. He's been appointed by the current president
in hopes to lower rates.
To cut rates.
Yeah.
And somehow the market has determined that we are not going to be cutting rates anymore.
Yeah.
And it's, what is that? I mean, was it a cow sheet? Like, what were you looking at to see?
It was. Yeah.
So what's funny is that people often forget, because Trump trash talks him all the time, but Powell was appointed by Trump.
Right.
Yes. He wanted someone straight from central casting that looked the part. You can't have Janet Yellen in there, and she doesn't look like she's in charge of money.
No.
So we put Powell in there, and then he spent, the next
the entire
8 years
term. Yeah. Just trashing him.
Just complaining about the guy. And so now what happens now? I mean, I would have been shocked if, you told me that Trump was going to put this guy in and he wouldn't cut rates.
Like, that's seemingly the case.
But that seems to be the way we're. So do you feel, though, going back to the market, is the market ever wrong on this? Like, is it?
I mean, the market has been wrong before, and there's a lot that can change between now and the end of the year. It's saying that there's a very, very slim chance of a hike in June, because I think it's like mid-June that they're in the next meeting. So it would be very suspect if something happened then. Like, I wouldn't imagine anything to happen in that meeting. It's way too soon to figure it out. But before the end of the year, like, a lot can change. I mean, who knows what's going to happen with this war? Who knows what's going to happen with energy prices?
Yeah.
Who knows what's going to happen with all of this? But right now they are pricing in a hike.
Yeah. So and pricing in a hike in prediction markets and in the bond market, right? Which is the other thing. I think, Tom Lee from Fundstrat has said repeatedly that the market tests a new Fed chair. I don't know what that necessarily looks like.
I don't know either. But it does seem to be a test right now.
Yeah.
We've seen a spike.
Is it? I mean,
inflation's sticky. Like, there's a lot of things that are going on right now that are putting pressure on the Fed to do one thing or another, regardless of whether or not the administration likes it.
But I think what Tom's talking about there, Tom and I are on first name basis.
Yes. Great guy, Tom.
I think what he's talking about there is actually the stock market, though. And the stock market, as we just talked about,
ripping.
It's up double digits.
Yeah.
And so to me, the market's been roaring along despite a lot of different, inflation, war, private credit concerns, whatever it might be. Market just keeps marching on. And that, I think, creates more opportunity for a pullback. Not that we can predict the future here, but you can see how we would be priced for that, right? If we are ignoring potential risks or what would the market be doing if we didn't have a war in Iran right now, right?
That's a great question. It's a great question, because the market's up close to 11% if you're looking at the S&P with a war.
With all this happening.
Right.
And obviously a lot of that is AI driven. I think if I were to paint a picture in which I see the Federal Reserve Chair tested, I would see a little bit of liquidity issue. That I think that could do it. So here's what else happened in May. Cerebras went public in May.
Yep.
Right. We talked about the SpaceX IPO. We talked about the history of IPOs in general, and Cerebras did exactly what we talked about.
Yeah.
IPO'd and it it's down 16.5% off its high. At one point it was down almost 25% off its high.
Yeah.
And it went down that day. And that happens a lot. They price for perfection and then it comes down. Right.
Yeah.
But there's a lack of optimism right, built into that. This is essentially a company with it doesn't have a moat. There's no protective moat around this company.
Right.
They're supposed to be, competition for NVIDIA, but they have like 3 customers that buy their chips. So if this is what happens with Cerebras, it makes me think again about the SpaceX IPO. And I have a slide in here that I'm gonna tell you where the slide came from, and you're gonna laugh.
Okay.
But it came from Blind Squirrel Macro. Okay. This guy, Blind Squirrel Macro. But it does not mean that any of this is not true. So
fair.
What we're looking at here is the layout of what happens when SpaceX IPOs at a $1.75 trillion valuation. It could be higher, it could be lower, but this is assuming you get that 1.75 trillion market.
Okay.
All right. So the IPO offer, because some of this is already built in. So you're trying to raise cash to equal the difference between the private valuation and the public valuation. Okay. So right now the IPO base offer size is expected to be $75 billion. That green shoe is essentially like added bonus. Like you need to have another $11 billion available if there's interest for it. Okay. So $86 billion in the total deal size. Deal size, think about it this way. Goldman Sachs is like the primary driver of this deal. They get paid the most on it.
Yeah. They're bringing it to market.
They bring it to market. They get 1% of the deal size. It's a pretty hefty deal size.
Yeah. Only $862 million in terms of your fee.
Yeah. So this has never happened before. We've talked about the largest IPOs in history. But the last time that you needed to have even like $25 billion, there's no historical comparison for this. So what they need to do is they need to go out and find people to buy $85 billion worth of SpaceX stock.
Think it'll happen?
No, I actually don't. But here's what they think will happen. Actually, I'm going to zoom in on this because it's a little bit tight for me to see. I didn't download it. All right. So the thing that I'm focusing on most on this slide is the bottom part. All right.
Okay.
So what they're saying is, there's going to be hedge funds buying. Some of this goes into the index eventually, et cetera. They are expecting retail investors to float almost $26 billion of this. There's nothing like that. It's like $1 billion would be a lot, right? That's actually, what is that, 30%? The average IPO doesn't expect more than 5% of the float to be captured by retail. This is 6x the scary option, right? When you're pushing it to get 5%, right? So they're expecting 30% of this to be funded by you, me, and your neighbors. How does that happen?
I don't know. That doesn't make any sense to me. I'm just looking at the IPO of Snow.
Yeah.
Famous IPO, and it's actually a famous stock this month, up absolutely astronomically.
Yeah, it's up 40% today.
So yeah, 40% in one day.
Snowflake.
So that was the biggest IPO in history when that came out.
It came out.
Yeah.
Yeah, I mean, Saudi Aramco was after, right? And then Alibaba. Okay, but yeah, go on.
It was one of them.
Yeah.
90% of the IPO shares were allocated to institutional investors, hedge funds, mutual funds, and pension plans.
Normal.
Right.
That's normal.
Retail investors were high at 10%.
And how much was that?
So it was 28 million shares at $120 per share. So if I do the math on that, so 28 million. So that's 3.36 billion. And then 10% of that would obviously be 336 million.
What if I told you that SpaceX was going to have $26 billion come from retail?
So not 10 times.
No.
Almost 100 times.
And the idea here is Elon Musk is just such a good salesman that everybody will be clamoring to buy his stock. All of the Tesla investors are clamoring to get more Elon Musk stock. I don't know, Colin.
I don't think he has as many followers as he once did, though. That's the problem for me.
Yeah.
I see the problem.
Do you see the problem?
Yeah,
I see a problem here. So, okay. So here's what Blind Squirrel sees.
$22.5 billion worth of shares directly sent into the hands of individual investors is the expectation.
And that's I think that's lower. But either way, if it's more than $1 billion, which it is, by multiples. How are we doing this? So this guy, Blind Squirrel, I'm going to call him Blind Squirrel like he's the GameStop trader guy, but he's a very intelligent sounding British man. Anyways.
What was it? Screeching Kitty or something?
No, you're close. Roaring Kitty.
Roaring Kitty. Yeah, that's what it was. Yeah.
Screeching Kitty. Doesn't quite have the same ring, but Screeching does have a very interesting. Anyways, so his tinfoil hat theory, which I think is interesting, and I'm not, not that I want to just like expose. I don't want to make everybody believe that this is something that's going to happen, but it's an interesting concept.
Okay.
So I'm not stamping this with the compound growth approval.
Okay, sounds good.
But I'm curious.
You're just pointing something out.
I'm pointing out what the guy at Blind Squirrel Macro has pointed out.
Okay.
And he suggests that this IPO won't happen and that instead it's a head fake. And in reality, Tesla will absorb SpaceX because there's just no way that they can find this demand out there.
That's a bombshell thought.
That would be a massive dilution of shares, right?
I don't know how the market would price that. It would be
the market wouldn't
scramble.
Price it. You mean the shares?
Yeah.
The shares that are
of
issued?
Tesla.
Yeah, I mean, it'd be crazy. But I think it's interesting to me because if we do see this IPO, where does this money come from? Right?
What's the problem?
Somewhere.
It has to come from the biggest companies in the world.
This isn't crypto. We can't just like make things up and say, here's what it's worth.
But you figure, I don't know the exact concentration in the S&P right now, but let's just say it's around 50 to 55% of the top 7 stocks.
I think that's maybe high.
Is that high? Okay.
Yeah.
Close, maybe?
Whatever it is.
Yeah. So if that's the case, we'll just say it's 45. If it's 45% in the top 7 stocks, that's a huge dilution of value to those companies where the money has to come from a big chunk.
Well, if it's coming from retail,
right,
I've got a great candidate for you. It's a stock that's up 100% this month and has a history of dropping by 50% or more.
It's not a recommendation,
but if you, I'm just saying, like, if retail is that's the type of name that retail loves. Retail loves Micron. Retail loves Iren. Retail loves silver. Retail loves Tesla.
Yeah.
Retail loves exciting names that look like they're going parabolic.
Yeah.
If retail is also expected to buy SpaceX, they're not sitting here waiting. They're invested in something else that they then have to sell to buy SpaceX.
But there's a limited amount of people out there.
Yeah.
Like that's the thing. Like I can't remember like what was the most recent like hype IPO. I mean, Snow was a big one, but it didn't hold a candle to anything like this. So if you have an IPO, and this is like such an interesting problem, that you have a company whose value is more than what people can actually invest the money into to give it that value.
Well, the value is only determined by whatever
purchasing.
Prices. Yeah.
Right, exactly. In terms of what people are willing to pay, but it's not even what people are willing to pay. It's what people are actually able to pay.
Yeah. Well, I mean, we know that we have more Americans than ever that have stock.
Yeah.
Right. It's like
56%.
Yeah. Right. So translating that percentage to the adult population in the country, that would be 160 million people.
Okay.
Right. On the high end.
Yeah.
So divide 26 billion by 160 million, and you look at what the average investor has to have.
Everybody would have to invest $162.50.
Just $162.56.
Yeah.
That's not bad.
No.
That's not bad. Yeah.
Did everybody get the memo though?
Yeah. I don't think everybody. The thing is that when we talk about how many people own stock, a lot of that's just in index funds.
But that's the problem. 54% or whatever the number is, it's right around there of investment in the stock market is passive. And this isn't going to go into indexes right away.
It is actually. They're changing the rules. Not kidding.
NASDAQ. I thought it had to be floated for a year.
Not anymore. They changed the rules, dude. Even since we did the SpaceX episode.
Just NASDAQ, though.
Yeah. Well, no. It's got to be in everything.
Coming.
Yeah.
So literally, I feel like this is just Goldman Sachs scrambling to figure out how to make this work.
Well, this is actually
and just lobbying people into.
Yeah, no, they're changing the rules in order to get this into the. There's also the thing about the lockup. So I think the average lockup is 120 days But you're
I
going to
saw
be able
this.
to get out of this in like some people are getting out of the stock in like 15 days.
So as if IPOs didn't crater fast enough, now you're releasing the lockup period so that way it can go even quicker.
Yeah. Well, and the other thing is, so the last time you saw something comparable to this, it was actually Tesla. I'm talking about a stock that was a large market cap getting into the S&P, because Tesla, again, you had to have that profitable, which by the way, SpaceX is terribly not profitable.
Right.
So they lose so much money that they would not qualify for the S&P 500 based on that metric.
Right.
Tesla wasn't profitable for a very, very long time. By the time it became profitable, what was the market cap? What was Tesla market cap when it entered the S&P 5? 658 billion. So it was 658 billion when the index,
by the time it was accepted into the S&P.
So then the index funds had to buy $658 billion worth of Tesla. Like they had to make room for it.
Right.
Right. The indexes, the index ETFs and whatever didn't buy 658
I know
billion,
what you mean,
but
though.
it took a large piece. It became a large piece of the S&P 500.
Yeah.
And they had to sell other stocks. Because if you own the index fund, you don't have a cash position sitting on the side. That can go
it
buy
has
Tesla.
to come out of other companies.
Right, exactly. So that's going to also be happening at the same time.
But that was my point. Like you have a decent amount of concentration in 7 stocks, but then there's all the other ones additionally.
Yeah.
But I do wonder, like, if at some point, I mean, I know it's 500 companies, but like the bottom companies, it's going to get so diluted that they're basically hardly going to have any market share at that point. So I don't know.
Yeah, I mean, something has to be sold for this investment to get in, unless it becomes Tesla.
Right, unless it doesn't IPO.
Look, I think the betting odds are that SpaceX and Tesla and Starlink and all this is all under one hood at some point.
Yeah.
The question is, does SpaceX IPO before that happens?
I know.
And I don't know. But if it does, and
where does the money come
it
from?
It sucks up all this liquidity, right? It sucks up all this money that we don't know where it's coming from. It's something else has to be sold for this to be bought. And then you have OpenAI. And then you have Anthropic.
So 30% of investment into this IPO is from retail investors, which is unprecedented. And then you have 2 more IPOs right after it that will probably have similar expectations.
And the retail names. People are going to want these AI names.
So ridiculous.
Yeah. Do you know, we never talked about this, but you're a big car guy. Cars were one of the OG American bubbles, right?
Oh, is this when Japan came in?
Well, do you know how many car companies there were in the United States at the peak?
I don't, but I know there was a lot. I know there was like 20 to 30 car companies that were like pretty big in the United States.
There were 3,000.
3,000?
Distinct automobile manufacturers. Yeah. Yeah.
Duesenberg, Pierce-Arrow, Stanley Steamer, like
Stanley,
so many other ones.
Steamer was a car manufacturer?
Was it?
I'm going to take your word at that.
I don't know if that's true.
The point is, and actually I got this from Kai Wu has a podcast now. And I was listening to his second episode and they were talking about this. But what happens with bubbles is that you end up having not just increased demand for existing assets, you have everybody chasing that demand creation, right? Like you have, too many railroads, you have, too many .com companies that don't actually make money. Eventually you have too many AI companies. It's going to happen, right? That's what happens if this is a bubble. If it becomes a bubble, it's not just the prices increasing and the valuation inflating. It's actually all the people chasing that riches, not by buying and investing in it, but by creating it. And that's what happened with the car companies.
Yeah.
And
it's the sucking up of capital.
How many car companies are there in the United States right now?
I mean, realistically, you have Chrysler.
Yeah.
Which owns like a ton of them. You have Ford, you have Tesla, and then maybe some niche brands.
Yeah. Rivian.
Yeah, Rivian.
Lucid.
Well, Lucid's not even American technically. That's owned by the Saudis.
Well, by American Rivian.
Yeah, exactly.
So I mean, the bottom line is that like we haven't even seen that part of it.
There will eventually have to be consolidation in the market, you would think.
Yeah, but like
when?
Yeah, exactly.
Yeah, and who?
Yeah. So I'm curious to see all of that play out. But I think that if you're looking at a situation in which the market might test the Fed share, going back to the point we were making like 20 minutes ago, having this type of liquidity dry up in the market would be really interesting to watch play out.
Yeah.
And if that's assuming that SpaceX does IPO. If they don't IPO, which is something I haven't even thought about until today, but if they don't IPO, what does that then say for the other companies? Does it create more opportunity for them, or are they all going to be like Cerebras, where there's no real demand following? I remember Dan and I were watching Brad Gerstner on TV the day of the IPO, and he was talking about how, it's going to IPO at 340, but there will be institutional demand at 275, and now it's worth like 248. And I don't know where's everybody stepping in to buy Cerebras?
But that's the thing that I struggle with, is the valuation of these companies.
Yeah.
How can you say that a company is valued at X trillions of dollars when there's literally not enough money to support that price in the economy?
I can't.
Like, that's the thing. I don't understand. Like, does it ever get to a point that a company becomes so big that it literally cannot be supported by the investors in the market?
Yeah. I think that countries like Korea, for example, South Korea, there are like 3
huge companies
that make up the
Samsung
majority.
and
Exactly. Yeah. So it's, I think that I've never worried about the lack of diversification or the increased market caps in the S&P 500. That doesn't really startle me or surprise me or anything like that.
Yeah.
I think that we are a shifting market, just like we are a shifting economy. And we've talked about how we went from a farming, economy to an industrial, to a consumption, et cetera.
Yeah.
And now I think the markets are just also evolving. And at some point, you need to let these companies challenge each other, so that we're entering this new time where you have some large companies playing in this AI sandbox that are attacking each other. You have Google, you have SpaceX, Tesla, everything that they are, right? And then you have OpenAI and Anthropic, and then you have like Microsoft kind of involved. Zoom actually is involved.
I know,
Erosion of market cap is just competition. I hope that's the case.
Yeah, it's kind of as if, we're in ancient Rome and there's like a bunch of gladiators competing with each other, and we're all just sitting in the arena watching it at the moment. And
betting on it.
Yeah, and it'll be interesting to see who comes out on top. But, competition in theory will, drive better results for consumers and investors. So let's see.
I think what's interesting is what's on the other side of this, because there's a lot of noise, as always.
Yeah.
And there's some we've never seen an IPO of this size come to the market. We've also never seen an IPO of this size try and fail to come to the market.
Yeah.
And that's going to be something brand new for us to absorb. And at the same time, Cerebras was the largest IPO this year so far, and everything else is meant to be larger than that. So
Cerebras doesn't hold a candle to the ones that are coming up.
So it's really interesting to watch these things play out in the face of inflation and high inflation and a new Fed chair and geopolitical risk, et cetera. I think that this is one of those things where it seems like the only way out is through, and you have to have the productivity. You have to have the returns on all this investment in order for it all to have made sense. Otherwise, we look at it like another dot-com bubble where there was real value there, but it wasn't as much as everybody pretended it was.
Yeah, I mean, the hype eventually dies. And then, whoever's left standing is the ones that are going to make out.
Yeah.
But then we've gone back and looked at the Intel chart before too. And basically that was completely lost it didn't come back to its all-time highs from 2001 until recently.
Yeah.
So, you never know what's going to happen. But the fact that you have these 3 companies that are going to, in theory, suck up so much market share is something that's entirely new, and no one can really predict what's going to happen.
No, but I can tell you that despite all this doom and gloom, I'm pretty optimistic, because we do have very strong earnings, and we are starting to
earnings
see
in
results.
Tech are very, very high right now. So people are benefiting from it, and consumers are using these products. We're using them as a business. Even my parents are using AI at this point, which is like mind-blowing me.
Yeah.
So the adoption of AI has probably been the fastest adoption of any tech or product that I know I've personally seen in my own lifetime. You even look at like the iPhone, like that took years to catch on.
Yeah.
It seems like ChatGPT just became, I mean, I know it's been out for a while, but it really took hold like maybe a year and a half, 2 years ago. And everybody's using it now, not just ChatGPT, but all the, subsequent ones that people know.
Yeah. How many Ferraris are they making? How many of these Ferrari EVs?
I don't know. They haven't necessarily.
What would you make as
discussed.
a guess? Just a guess.
I don't know how many. Well, see, here's the thing, is that people are going to not want these, but Ferrari is going to make people buy them to get the other models.
I feel like if this IPO happens, there will be a lot of money available for some of these Ferraris.
It's probably true.
right.
All right, let's wrap it. It's we're a little over, but like, subscribe, share with a friend. Thanks for tuning in. We'll have another one for you next month.
Sounds good. All right. Thanks,
Right.
The information in this material is for general information only and is not intended to provide specific advice or recommendations for any individual. Investment advice offered through Integrated Partners, doing business as Ko-Fi Advisors LLC, a registered investment advisor. Integrated Partners does not provide legal, tax, mortgage, advice, or services. Please consult your legal tax advisor regarding your specific situation. Past performance is no guarantee of future results. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that the strategies promoted will be successful.
Compound Growth with Wheeler and Colin. Sponsored by Ko-Fi Advisors. Reach out today. Yay!